Okay, so the very first step that I want to start with is talking a little bit about what I call accumulation. Now, you've already learned about the basic move that defines the market, right? A game of supply and demand. You've already learned this. Now, I want to take it a step further now. The way that I've always thought about teaching or whatever is you start with something simple and you build upon it so it makes sense as you build upon it. And there's an actual cohesive understanding behind what's going on. So very simply, we've already went over the fact that this overall thing right here, the selling before the buying, is created by sell orders that come into the market, overall buy orders accumulating, buying up those sell orders, and the markup to a new high and a move higher, ultimately. So this is what you call now, the same way that we just started with this game of supply and demand, this is what you call simplified, and we'll talk about complex soon. But this is what simplified order accumulation is. So if you simply knew, if you knew what the comp set operator wants to do, and you started to see a version of this play out, okay, right here, then you know this is what you would call an accumulation, right? Because overall sell orders that are coming into this market are being accumulated, bought up, and after going sideways for a bit, they begin to move higher because that accumulation completes, supply dries up, and price moves higher. Now, this is what I want to start now by labeling simplified accumulation, because the reality is we never know if something's truly being accumulated or something's like in an accumulation, and there are tools that we can actually use to see that and define that. Now, when price is trending or moving in a direction, and again, for the sake of the content in the portal material, we're going to assume that it's moving higher, okay? Because we're studying at the moment the buy side to understand it conceptually. So assuming and looking at price, let's say it's trending or moving in a direction, moving up. It is mainly being accumulated, going through accumulation, the thing you see above, or reaccumulated, basically the exact same thing. So the way that I want you to really take this in is that accumulation equals reaccumulation, because both undergo and do the same thing. It's just that oftentimes accumulation happens at the beginning of a move. Reaccumulations happen as the move continues. And I'll show you examples in 1 second. So when price is moving higher, trending higher, it is mainly being accumulated and then reaccumulated through what we call flushes. You can write this word down now, but we are going to go over plenty of examples and discuss flushes in more depth as we continue. It goes through flushes until there's nothing left to accumulate, literally, until all the accumulation that could have taken place has taken place and it's made its crazy move, at which point, because accumulation is now complete, it undergoes a final flush. So by reading this, before we even continue with anything, you should imagine that a market that is trending or is good is going through accumulation, moving higher, reaccumulation, moving higher, reaccumulation, moving higher. Also known as, and taking that to the next step, accumulation, moving higher, flush out, reaccumulation, moving higher, flush out, reaccumulation, moving higher, flush out that leads to no more accumulation and an overall change in the underlying market that makes it unwatchable, untradeable, and not worth our time or risk. So again, you're going to see examples of this in 1 second, but I want to assimilate you to understanding what is actually happening in a move. How is a move created? And this is just through words at the moment, but I suggest you write this down through just the explanation that I'm giving. So yes, at which point, after there's nothing left to accumulate, it'll undergo a final flush, which we can label failure, because now the move that was happening is now failing. To either, once there's failure in the market, it either now wants to repeat that process again, so it can accumulate, move, flush, reaccumulate, move, flush, reaccumulate, and keep doing that until it fails again. So it can either repeat the process again, or it becomes what I like to label, and not to bullshit anyone, a worthless market. Now, this might be crazy to hear because, as I love to say, a lot of the space, a lot of the trading space teaches you to potentially focus on one market only, and really trade it, make it your baby. This is complete bullshit, complete nonsense. Markets can become what I like to call worthless. They can go from being in very clear stories stories that are worth following, stories that are worth trading, stories that are worth, let's say, investing in if it's a movie, right? You just want to keep watching it. And it can become a bad story where you need to learn to cut yourself off from it and walk away from it. It can become what I like to call worthless. And it's true that a market can be very clear for a long time or for a short amount of time and then become worthless. Going back to some examples here, for instance, let's say we were someone that's trading whatever this is. There's a market and a story that can be good. Within the time that that market or story, because in this case, the EVC was lining up, which we'll talk about why in the future, but this is just from this example. When the EVC were all lining up and good, the story was good. And while the story was good, there were still a lot of times, if you remember, that we shouldn't be trading. Of course, there's still times that we shouldn't touch the market at all, but within the times that we should, it results in continuations of good story because there's accumulations followed by reaccumulations, so we can keep on moving higher. And at some point, the EVC begins to falter, begins to fail. It could have happened earlier, it could have happened later, but it begins to falter and fail, at which point it flushes out for the purpose of failing. And now, once again, it can begin to reaccumulate and new orders can come in and it can start making moves and start reaccumulating and moving higher. So you can remember, you don't have to draw this. We'll talk about this in a second in your notebooks or whatever. Or it can become a worthless market, which is exactly what this market ended up doing after it had in this case, multi-month, even over a year long of a good story. And that story became worthless. And at that point, the market became something that I didn't even look at. Right? So what you're learning as well as we're doing this is that markets can and do become shitty. They can and do become not worth watching. And the faster you learn that, the better you'll become because now your focus won't be, I must trade this Forex pair. I must trade this futures pair. I must trade this stock. Your focus leaves from doing that and your focus moves towards, I'm looking for a market that is meeting the criteria for a good move based on my EVC, so I can take it and I can put my risk behind it and hopefully it can deliver. And it's not a worthless market. Otherwise, it might be worthless and not worth following. So right now, what I want you to understand just out of this concept alone is that markets can and will be, and assets become worthless. Markets that are not worth watching given their EVC state. The faster you understand this, the much faster you begin to progress because a lot of people think they need to be locked in to one market and one market only. This is nonsense. Now, within the cycle of accumulation, so again, this is what you can call the beginning of a cycle. Very simple, okay? Within the cycle of accumulation where you have the selling, so some selling that came in and buying is coming in and buying is coming in, it could, it can happen like anyway. Buying is coming in and buying is absorbing those sellers. They're being accumulated. That's where the word accumulation comes from. Orders are supplied from mild extensions, right? So price extends, orders are supplied, new supply creates redemanded. Well, that supply is redemanded after a flush out. And then MBs create buying opportunities. So hopefully you're starting to see the start of what creates opportunities, potential opportunities in the market, right? Some kind of move occurs. There's some kind of mild extension of some sort. Selling comes into the market. That supply is now redemanded by overall buyers after a flush out. After a flush out, price moving lower, buyers come in and start creating MBs, demand zones of some sort, over and over and over again to give you the opportunity to now participate in the next accumulation leg higher. Okay, so this is kind of the cycle under which a market moves when it's a trending one in the case of being a bullish market. Now, let's go back here for 1 second. These cycles of flushing out to create buying opportunities happen after some anticipation of a higher low has been created, right? So I've shown you this over and over again, at least from the entry start, but very simply, these initial buying opportunities happen from the initial accumulation, which is some version of this anticipation of the higher low being met on some level, and then MBs being built, right? So as a result, the flushes plus the move higher are what we call reaccumulations or accumulations, which is why I made this little statement right here before we kind of started this thing. And this beginning cycle, literally, of selling coming in, being bought up, and moving higher is the first step in what we call a simplified order accumulation. And now we're going to take this to the next step and the next step and the next step. So I'll see you in the next one.